What's going on, you guys? My name is Daniel and welcome to Money Recall. So today we're going to be going over exactly how to invest according to Warren Buffett's advice to his wife, who will eventually be in charge of his money at some point when he dies, and how he would like her to invest it. And then using a similar thing. This is also not anecdotal, but it's very everyone's investing circumstance is different. So when somebody does blanket investing advice like this, learn something from it and take it from there. Everyone's situation is different. So when we go in here, this is the easiest place that I found out of Forbes, and it is pretty straightforward and simple. It is to put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. I suggest Vanguard. This is for a few reasons, actually, and then I'll get to exactly how you can do this inside your TSP. Incredibly easy. So for starters, and then exactly how it's a little bit better than this plan, actually. So because we have certain things that are offered to us, like the G Fund, which you can move in and out like short-term government bonds. You can move in and out of this G Fund like short-term government bonds. You can invest in long-term government bonds for the risk of a short-term bond, which is pretty phenomenal. Long-term bonds usually have a higher yield, so you get a little bit more that way out of the system inside the TSP. And then 90% in a very low-cost S&P 500. So that would be the C Fund. So all you're doing is putting 10% in the G Fund and 90% in the C Fund. And that would be exactly as he would have suggested. And Vanguard is a very good low cost, because when you have high costs affiliated with your investments, as far as managing it and other fees that get wrapped in with it, you end up losing out on a large chunk, anywhere from 30% for higher ones to sometimes 50% for outrageous ones, of the total amount that you could have saved. So having a low cost, which the TSP is a very, very low cost one, it is 0.033. So for managing costs, it's very, very low. If you go and read the book by Tony Robinson's Money Master the Game, he goes over exactly why this is a very, very good system and why index funds are the best way to go, because people that manage the money tend to not beat the market, and they tend to do worse on average, because nobody really knows, but the market tends to go up in general because the US is robust, and the S&P 500 is one of the best funds to be in. So this has been Money Recall. If you found this useful or enjoyable, or it helped you out, don't forget to drop a like and subscribe.